By the end of this video, you will know exactly how to become a trader starting from absolute zero. We're going to cover everything you need to know about trading together. Honestly, there'll be more value in this single video than in some courses people try to sell you for thousands of pounds. We're going to look at what trading actually is, how to read a chart, understanding candlesticks, how to analyze the markets with the best indicators, and what the best trading strategies are right now. I'll even show you a complete strategy at the end where I take a live trade right in front of you and close with a 4-figure profit. You will truly have everything you need to become a winning trader. But before that, who am I? I'm Jay. I've been trading for 12 years now. It's allowed me to go from being broke and depressed about life to today being free, living the life I actually dreamed of. Every month, my trading brings in between 50 and 80,000 pounds, and above all, it allows me to be 100% free. I buy what I want, the watch I want. I can fly to the other side of the world if I fancy it because I work from my laptop. And most importantly, I am my own boss. I work when I want, at the time I want. And all this is thanks to trading. That's why I'm certain that everybody should learn to trade and why I'm here right now giving you this trading for free. Everyone should be able to become free and live their dream life, even if they're starting from scratch. I'm telling you this because that's when I started. I was living in a tiny studio flat. I was completely broke and making ends meet was a struggle. If I made it to where I am now, anyone can succeed. In this video, I'm going to unveil absolutely everything I know about trading whilst keeping it super simple, because I know when I started, sometimes there was just too much information and you can feel a bit lost. Here, everything is condensed. I've already helped thousands of people get started in the markets and win their first 5-figure trades. But most importantly, you're going to get the best information to help you make money every day in the markets, even if you're a total beginner. No bullshit, no fluff, just real trading. So put this in full screen, get something to take notes with, and let's go. Part 1, what is trading? Trading is simply buying or selling an asset over a short period of time. It's essentially the opposite of traditional investing. In investing, you might buy a share, wait for 10 years, and hope to make a capital gain. What we do in trading isn't over 10 years. It can be, it could be every day, every minute, or even every second if we want. We bet on the price of stocks, cryptocurrencies, really anything going up or down. And as I said, the huge advantage of trading is that we can bet on the rise and the fall. If we bet on the price going down and the market drops, that's what we call shorting. And yes, you can make money doing that. I assure you, it's simple because we don't physically hold the assets. If you want to place a trade betting on gold going up, you don't need to store 10 kilos of gold bars in a safe at home. Don't worry. Just with an app that we'll see a bit later in the video, we can take a position, open our trade, and that's it. Before we jump onto the charts, I want to answer the 3 most asked questions in trading. First, how much capital do I need to start? Most gurus on the internet will tell you need £2,000 or £100,000 because behind the scenes, they just want to sell you a course. The truth is, even with £0, you can start trading. Today, I'm going to show you the tools a bit later that will allow you to create virtual accounts, so demo accounts, so you can train with your strategy without investing a single penny of capital. Anyone can get started. The most important thing is to start and have the right strategy, because once you're profitable, whether you have £100, £10,000 or much more, through the snowball effect, you will get results. Just realize that when I started, I was totally broke. I must have had less than £1,000 in my trading account. And yet today I trade with a 6-figure capital. Second question, does trading take a lot of time? No, unlike a traditional 9-to-5 job, in trading, we aren't paid for the time we spend trading. We are paid for our decision making in the market. For example, imagine you finish the training and you want to apply the strategy I'm going to teach you. You say to yourself, okay, tomorrow I'll turn on my charts at 6 a.m. and I won't stop until 8 p.m. You will have traded for a long time, but that doesn't mean, you'll make more money. In fact, it's often the opposite. By being glued to the charts too much, you'll risk taking too many bad opportunities and doing stupid things. Once you have the right methods, you can come to your charts, analyze the market for 5 minutes, take a trade for 10 minutes and pocket £2,000. In trading, we are paid for our decisions. So even if you have a few minutes a day, and an internet connection, you can make money, whether it's alongside your job, your studies, or even if you have 10 hours free in your day. And that leads me to, how much can you earn with trading? I'm not a dream teller. I'm not going to tell you you become a millionaire in 1 month thanks to trading, but it's entirely possible that after a few months, you can start earning £2,000 to £4,000 a month. That's my story. At the beginning, I didn't trade to be a millionaire. No, I traded because I wanted a profession that could bring me money for life and was sustainable. But automatically, with compound interest, I went up to £10,000 in profit, then 20,000, 30,000, 40,000. In trading, there's no glass ceiling. Your capital, if you reinvest your gains, is a snowball that keeps growing. At the start, maybe you'll make a few quid per trade, then tens of pounds, then hundreds, then thousands. There's no limit at all. You need to know that in trading, we can focus on many different types of assets. And the most famous is the forex market, so the foreign exchange or currency pairs. The best example is when you go on holiday abroad. When you arrive at the airport, you need to pay in the local currency. So if you fly from London to New York at Heathrow, you'll need to exchange your pounds for dollars. Without realizing it, you've just done a transaction on the Forex market. Now, imagine that every company, every person, and every bank does these transactions every day. That makes Forex the market with the most exchange volume. We aren't talking about $1 billion exchanged daily or even 100 billion. There are $6 trillion exchanged every single day on Forex. It's colossal, and we can capitalize on that. The most famous pairs are the euro against the dollar, so euro USD, and the dollar against the yen, so USD against JPY, and the pound against the dollar, so GBP USD, often called cable in the UK. The second type of asset is shares. All the companies you see daily, so Apple, Google, maybe even UK firms like BP or Barclays, we can trade on those too. It's an interesting market though. Personally, I trade it very little because their opening sessions are quite short, and for my strategies, you make a bit less money. In the same category, we have stock indices, which are simply groups of value. You surely know the FTSE 100, the UK index with the 100 biggest British companies, or the S&P 500, the 500 biggest US companies. It's pretty simple. A class of assets I really love is commodities, so oil, gas, gold, silver. These assets can be extremely volatile, meaning the movements can be very violent, sharp, which gives us a lot of opportunities as traders. And finally, we have digital gold, also known as Bitcoin, and generally all cryptocurrency. This is the market we can win big. Clearly, it can be dangerous, but recently it's been booming. Don't worry, I'll tell you just after which asset I recommend you start with to easily make your first £1,000. In trading, there are three main styles. So you've got swing trading, intraday, so day trading, and scalping. The difference isn't the assets, it's just how long you hold a trade. Swing traders, they trade the least, maybe 1 to 2 trades a week, holding for several days or weeks. Day traders, they take more positions. Trades last a few hours typically. They might open a position at 10 a.m. and close it at 5 p.m. Scalpers, they focus on tiny movements, so trades last a few seconds or a few minutes maximum. This is who opens the most trades, maybe 2 or 3 positions per session. Which one do you choose? That depends on you. If you're patient, swing trading fits. If you manage stress well, scalping is good. The concepts I'm going to teach you work for all time frames. Personally, I'm very impatient. I like to take a trade every day and see profits on my app. So I hate swing trading, but maybe you're the opposite and prefer less stress. What is universal in trading, however, are the sessions. There are 4 or 5, but I round it down to 3 to keep it simple. So you've got the European session, the London session. This happens roughly from 8 a.m. to 5 p.m. UK time. London is the biggest financial hub in Europe. This is where European traders enter and European assets move. You've got the US session, so New York. This runs from 1 p.m. to 9 p.m. UK time. Obviously, due to the time difference, it's morning in the States. So the Asian session, which is Tokyo, from 9 p.m. till 6 a.m. UK time. Naturally, UK European assets move more during the London and US sessions. Asian assets are like the yen, move more at night. Pro tip as well, you see that between the London and US sessions, there is an overlap from 1 p.m. to 5 p.m. UK time. This is very interesting time to trade. For scalpers and day traders, this is often where we find the best opportunities, the ones that make us the most money. Right, now that you've mastered the different trading styles and sessions, you're going to get into the most important part, the part that will actually make you money, how to analyze a chart. We need to understand the best zones to wait for a reaction, whether that's buy or sell. We can anticipate these movements in 2 ways. Simply looking at the price action on the chart, this is called technical analysis. Using economic news and data, this is called fundamental analysis. I told you we're going to cover everything. We'll start with technical analysis. What are the best zones to trade, the best software to find them, and how to predict a market rally or a crash? Personally, this is what I prefer doing and what makes me the most money. Just quickly, down in the description, you'll find a document where I've listed all the websites and tools I use in this video. That way, you're sure to go to the right sites, avoid getting scammed, and you don't need to scramble to take notes. Plus, most of the links I've put there have a sign-up bonus or promotion, so it's worth taking a look. The first piece of software is TradingView. From today onwards, this is where you will spend most of your time. For me, it's hands down the best charting platform. It's used by every serious trader I know. It's super easy to use and packed with features. This site allows us to see the real-time price of every asset we want to trade, so gold, Bitcoin, Euro, USD, everything. The best part, they have a free plan. That means you can access it without spending a single penny. I know when you're starting out, you don't have hundreds of pounds to invest in software. I obviously have a pro plan because I'm a professional, but honestly, when you're just starting, the free version is absolutely fine. And pro tip, usually around the Black Friday or Christmas, TradingView does massive sales, sometimes up to 80% off. That's why, I usually renew my subscription anyway. Once you're on the chart, the first thing you need to master is what we call Japanese candlesticks. It might look complicated at first, but it's actually dead simple. Here is what a candle looks like. On the left, a bullish candle, so green up. On the right, a bearish candle, so red down. All candles are made of 2 parts, the body, the thick colored part, and the wick, the thin line you see at the top and bottom. Think of it like a normal wax candle. For a bullish candle, the bottom of the body is where the price opened. For example, if you're on a 30-minute time frame and a new candle forms at 12, the market opens here at 12:30, the candle closes here, at the top of the body. Simple. The wick just represents the highest point and the lowest point the price reached during the 30 minutes. For the bearish example, it's the same logic, but reverse. The market opened at the top of the body and closed at the bottom because the price went down. Back on the charts, it makes more sense now. These candles allow us to identify who's in control based on the size of the body or the wick. At the top left of TradingView, you have the asset name. Here we have gold versus dollar, so XAU USD. You can use the search bar to find any pair, so Euro USD, GBP USD, the pound, Apple, Bitcoin, anything. On the right, we have our time frame. So daily, D, each candle represents 1 day. 4 hour, 4H, each candle is 4 hours. Generally, the higher the time frame, daily, weekly, the better it is for swing trading and seeing the big picture. The lower the time frame, so 1 minute, 5 minute, the more precision you have for scalping. Think of it like a surgeon. When a surgeon looks at a patient, first they look at the whole body, the big picture. They don't need a microscope for that. But as soon as they need to operate on a tiny wound, they zoom in. It's the same here. If we want the overall trend, we look at daily. If we want a precise entry, we drop down to the lower time frames. You can also change the chart style here. Some people use lines, like you see on the news or Bloomberg. It's okay for a quick look, but it hides too much information. I recommend always sticking to candlesticks. A quick setup tip. Right click, go to settings, then appearance. I invite you to remove the grid lines, make them transparent. What I'm going to teach you are the simple methods. The biggest mistake traders make is cluttering their charts with a million colors and lines. It just confuses you, so keep it clean. On the left, we have our drawing tools. There are hundreds, but I only use about 10. So Trendline allows you to draw lines that identify trends. Tip as well. So if you draw a line, click the settings cog, add text like resistance, save it as a template. Next time, 2 clicks and your line is labeled. Horizontal ray draws a line to infinity. Great for support levels. And then you've got Fibonacci retracement. I absolutely love this tool. So I'll explain exactly how to use that in a bit. But long short-term position, this is crucial. It stimulates a trade, showing your risk to reward ratio, your stop loss, and your take profit visually. Rectangle, instead of a thin line, I use this to draw zones of support or supply. Make sure to click the little star icon next to these tools to add them to your favorites bar. It saves so much time. On the far right, you have your watch list. This is simply a list of assets you track. Don't put 50 things here. Keep it focused. Here is my watch list. So I trade gold, XAU USD a lot, Euro USD and GBP USD for forex, Bitcoin, Ethereum, and the US indices, so S&P 500, Nasdaq. Pro tip, once your list is set up, you can just press the space bar on your keyboard to cycle through them instantly. It's the fastest way to scan the markets for opportunities. So that's where you'll do 80% of your work, so the technical analysis. But remember, there are 2 types. The second is fundamental analysis. This is using economic news, so politics, inflation, wars, to predict prices. For example, if the US president announces he's buying 1,000 Bitcoin, the price will likely rocket up. Conversely, if a country goes to war, investors panic and sell that country's currency. But you also have a scheduled economic events. Central banks releasing interest rates, unemployment figures, so NFP or inflation data, CPI. To track this, I use an economic calendar, link in the document. On the calendar, you can see the news for the week. Filter it. You only want high impact news, usually marked in red for the UK, so GPB, Europe, EUR, and the USA, so USD. We don't care about economic news from minor economies. It won't move the market. How do I use this? Honestly, I don't use it to trade the news. I use it to know when not to trade. If I see a massive announcement like the non-farm payrolls coming at 1:30 p.m, I avoid opening a trade right then. The volatility is it's just too dangerous. To be a profitable trader, you don't need to be good at economics. You just need to combine the context of the news with the technical analysis we're about to do. Okay, back to the charts. Now that you've got the foundations, we're going to hit into the hard skills. We're going to look at confluences. These are the specific clues that tells us if the price is going up or down. We're going to stack these clues together to build a winning strategy. Now, let's talk about candlesticks. This is often overlooked, but understanding what a candle is telling you is like reading the market's mind. It's a battle between buyers and sellers, and by looking at the wicks and bodies, we can see who is winning in real time. There are 3 specific candle patterns you absolutely must know. So number 1, the hammer and inverted hammer. This is powerful for spotting reversals. Imagine a market is falling. It's hit a support level and then boom, buyers step in and push the price back up, leaving a long wick at the bottom and a small body at the top. That is a hammer. The long wick shows us that sellers try to push the price down, but they've got rejected. It's a strong signal that the market might turn bullish. The inverted hammer is the same concept, but at the top of the trend. A long wick pointing up shows sellers are pushing back down. Number 2, the engulfing candle. I use this even more than the hammer. This is when a new candle completely engulfs or swallows the previous one. For example, you've got a small red candle, okay? And immediately after, a massive green candle opens lower and closes higher than the entire previous candle. This shows massive injection of volume from buyers. It screams momentum shift. And number 3, the doji, okay? So this happens when the market opens and closes at the exact same price. It looks like a cross. This represents indecision. Buyers and sellers are fighting with equal strength. When you see this, don't do anything. Just wait for the market to pick a direction. But beyond the patterns, you need to understand momentum. Look at this Bitcoin chart. Here we see huge red candles with barely any wicks. The bodies are full. This means sellers are in total control. Do not buy here. But look what happens here. A wick forms, then a second wick, then a hammer candle. The price stops crashing. This shows the sellers are exhausted. And right here, an engulfing candle. The trend reverses. It's about reading the story the chart is telling you. If you see long wicks rejecting a level, you know a reaction is coming. Now, candles are even more powerful if you combine them with market conditions. This is a pillar of trading that very few beginners understand. Yet it comes from Nobel Prize winner Eugene Farmer. Basically, you need to understand the trend. In movies, when the stock market goes up, it's a straight line. In reality, it never works like that. The market moves in waves. It goes up, corrects a bit, accumulates, and goes up again. We use Doe theory to identify this. Bullish markets are uptrend. The market makes higher highs and higher lows. And as long as the low points are getting higher, we are in an uptrend. We only look for buys. So a bearish market, downtrend, the market makes lower highs and lower lows. Here we only look for sells. It is that simple. Don't overcomplicate it. Within these trends, there are 4 contexts or phrases, okay? So think of it like a hiker checking the weather before a climb. You need to know the context to choose the right gear. Consolidation, so range, the market moves sideways between a high point and low point. It's doing nothing, indecision. So expansion, trend, the range breaks, the price shoots up or down. This is where the money is made. Retracement, so pullback. After the explosion, traders take profits. The price pulls back slightly. This is healthy. And reversal, the trend ends and goes the other way. Understanding this gives you a bias. If I see we just broke a range and are on an explosion phase, I'm not going to try and short the market. I'm going to ride the wave. Finally, let's talk about support and resistance. As you move through these phases, the market creates ceilings and floors. So resistance, a ceiling the price hits and can't break through. Support, a floor the price bounces off. Think of a sport like a table. If I lean on it, it holds me up. But if I jump on it with enough force, I might break it. To validate a support or resistance, we need at least 2 touches. Look at the pound. So GPB here. Every time it hits 1.34, it drops, touch 1, touch 2, touch 3. This is a strong resistance. If the price comes back here and I see a shooting star or bearish engulfing candle, that is a high probability sell trade. But be careful. The more a level is touched, the weaker it becomes. Like the table legs getting wobbly, eventually it breaks. And here is the magic rule of trading. When a support is broken, it becomes resistance. When a resistance is broken, it becomes support. Look here, the price smashes through the support. It then comes back up to kiss that old floor from underneath. It rejects it and then it drops. This is called a break and retest. Professional traders wait for this to retest to enter. It's the safest way to trade. So recap, we know how to read candles, so hammer engulfing. We know the trend, so higher highs, lower lows. We know the phases, so range, expansion, and we know our key levels, so support and resistance. You already know more than 90% of people who try to trade, but now we're going to add superpowers to this analysis. We're going to add indicators to increase our win rate. A great way to improve your results, and honestly, you might be shocked by the performance boost, is to combine what we just learned. Support resistance trends and what we call technical indicators. I use these as confirmations. Some traders trade using only indicators. I wouldn't recommend that when you start, but if you find the right combination, it can work. I'm going to show you the top 3 indicators I use daily. To add an indicator, just click on indicators at the top of Trading View. The first one isn't super famous, but it's a game changer for organization. It's called the Asian Ranging Kill Zone. Now, this indicator won't tell you buy here or sell there, but look what it does. It highlights the trading sessions directly on your background. Blue box, the Asian session. Other boxes, London and New York sessions. So I invite you to go into the settings, so the cog icon, make the Asian range grey, it looks cleaner, and turn off the other sessions if they clutter your view. So why use this? It helps you orient yourself. You don't need to constantly check the time or guess, what's this volatility from yesterday? At a glance, I can see, okay, that happened during Asia. That happened during London. It segments your trading day perfectly. I have this on my charts 100% of the time. The second indicator is much more famous, so the RSI, the Relative Strength Index. Just stick to the standard one, click it, add it. The RSI shows the strength of the market momentum. Is the market overextended? Are there too many buyers? There are 3 key levels to understand. So above 70, overbought. When the purple line goes above 70, it means there are too many buyers. The price is expensive. We often expect a correction or a drop from here. Below 30, so oversold. When it drops below 30, everyone's sold. The price is cheap. We expect to bounce back up. So 50 neutral, buyers and sellers are equal. Look at this dip. The market crashes, the RSI hits the oversold zone under 30. At the same time, we see a doji candle, indecision, boom. That creates a perfect buy signal. The trade would have been a winner. I use the RSI as a final check before I click buy. I look down. If the RSI is screaming, overbought, maybe I wait. The third one is the EMA, so exponential moving average. This is simply a line that calculates the average price over the last X candles. Go to settings. I use a few different ones. So length 9 for scalping, short term, length 50 for intraday, length 100 and 200 for swing trading, so long-term trend. Let's put the 50, 100 and 200 on the chart. These lines act as dynamic support and resistance. Look at gold here. We are in an uptrend, so price is above the lines. The price pulls back, hits the 50 EMA and bounces. Then it hits the 100 EMA and bounces again. It's like a moving floor for the price. The crossover, golden cross. Also, watch when the lines cross. Here, the faster moving averages cross above the slower ones. This is a signal that momentum is accelerating. Huge buyers are entering. In the strategy I'm going to teach you, we use these to make sure we are trading with the trend. If the price is above the EMA, we only buy. If it's below, we only sell. Simple. Now, I'm going to show you a tool that I don't consider an indicator. It's a weapon, the Fibonacci retracement. I use this every single day. First, the setup. Select the tool, draw it anywhere. It probably looks like a rainbow mess right now. Go to settings, uncheck everything except 0, 0.5, 0.618, 0.786 and 1. Make them all one color. I use white or gray. Remove the background color as well. Why these numbers? We established earlier that markets move in waves, impulse, correction, impulse. We use Fibonacci to measure how deep the correction will be before the price explodes again. So 0.5, 50%. This is the halfway point. It's a psychological level. Imagine a 50% sale at a shop. Traders love buying a 50% discount. 0.618, the golden ratio. This number appears everywhere. In nature, music, architecture, in trading, it's a magical level where price often reverses. 0.786, the deep discount zone. How to use it. In an uptrend, you draw from the specific low point to the specific high point at the movement. Look at this example. Price shoots up. I draw my fib from the bottom to the top. The price pulls back exactly to the 0.5 level. It struggles. Then it dips a bit lower, exactly to 0.618. The golden pocket, boom, massive reaction upwards. If you had placed a buy order at that 0.618, you would have caught the entire next move. In a downtrend, it's the opposite. You draw from the high to the low. The level acts as resistance. One last concept, imbalance or fair value gap. Sometimes you see a massive candle with no wicks overlap, a huge jump. This leaves a gap in the market. So the market hates gaps. It's like leaving a door open. Eventually the wind will slam it shut. We draw a box across this gap. Look here, the top of the candle 1 does not touch the bottom of candle 3. That space in the middle, that's imbalance. The price will almost always come back to fill this gap before continuing. It acts like a magnet. If you combine an imbalance fill and a Fibonacci 0.618 level plus a support level, you've got a sniper entry. Okay, so you've mastered the concepts that take some traders months to learn. You can read the charts, you know the indicators, you understand Fibonacci. Now, as promised, I'm going to put it all together in a step-by-step strategy. I'm going to show you exactly how to enter, where to put your stop loss and where to take profit, and the money management rules to make sure you stay profitable. And then after that, I'll take a live trade to prove it actually works. Okay, pay attention. This is a strategy that can realistically make you 20 to 200 pounds a day if you apply it correctly. We're going to combine the concept we've learned. First, let's set up the chart. So we're going to use the 1 minute or 5 minute time frames. This strategy works for swing trading too, but my goal here is to show you how to be a sniper. Get in, get out, make profit, and get on with your day. Which assets, okay? So it works in everything. Stocks, indices, forex, but after testing this hundreds of times, the biggest money is made on gold, so XAUSD and Bitcoin. Why? Because they are volatile. Volatility means movement, and movement means profit. If you're a complete beginner and scared of fast movement, start with forex pairs like GBP USD, pairs like that. Step 1, identifying the background trend. Remember the surfer analogy. If the waves are going right, don't try to surf left. You'll just get crushed. We want to trade with momentum. To make this dead simple, we're going to use a specific indicator called a super trended moving average, okay? It looks like a cloud of moving averages. The rule, do not look at this on the 1 minute chart. That's too zoomed in. Go to the daily time frame. If the cloud is green and price is above it, we are in a bull market. We only look for buys. If the cloud is red, we're in a bear market. We only look for sells. Even if you see a perfect selling opportunity on a green market, ignore it. We don't fight the trend. Step 2, we zoom into our 5 minute chart. We know what we're looking for. Buys, for example, we wait for the market to make a move up and then start to correct, so pull back. Step 3, Draw your Fibonacci retracement. Take your tool, click on the low, drag it to the high. We are waiting for the price to come back into our golden zone. This is the area between the 0.618 and the 0.786. I call this the OTE, the optimal trade entry. Wait, this is where most people fail. They get impatient. If the price doesn't touch the 0.618 line, you do not trade. Think of yourself as a sniper lying in the grass. You can wait for hours for the target. If you shoot randomly, you miss and give away your position. We wait for the price to tap that line perfectly. As soon as that price touches the 0.618 or enters the zone, we enter the trade, immediate execution. Before we place a stop loss and take profit, we need to talk about maths. This is the secret to not blowing your account. Trading is like flipping a coin, okay? So if I flip this coin, heads equals I lose £100, tails I win £200. If I flip it 10 times, statistically, I will get 5 heads and 5 tails. 5 losses times £100 minus £500. 5 wins times £200 is plus £1,000. So net profits plus £500. Even though I was wrong half the time, I still made money. The loser in trading is the one who focuses on one coin flip. They lose one in trade and think strategy's broken or the market's rigged. The winner focuses on the series of flips over long term. This is called the risk to reward ratio, so double R. If you risk £1 to make £2, so 1 to 2 ratio, you only need to be right 33% of the time to break even. If you have a 50% win rate, which is easy with a strategy, you are printing money. Most signal groups on Telegram will promise you a 99% win rate. Run away, they usually risk £100 to win £5. One loss wipes out 20 wins. We don't do that, we're professionals. Back to the trade. So step 5, protection and target. So stop loss, we place this just below the 0.786 Fibonacci level. Why? Because if the price goes lower than that, our bullish structure is broken and we were wrong. The stop loss saves us. It's not a bad thing, it's our insurance. Take profit, we target a 1 to 2 risk for reward. If my stop loss is risking 1%, my take profit is targeting 2%. Look at this example on the chart. So price hits entry, I buy, stop loss set, TP set. What happens? Price rallies, breaks the previous high. And a pro rule, once the price breaks a previous high, I move my stop loss to my entry point, so break even. Now I literally cannot lose money. It's a risk-free trade. Result, boom, take profit hit, no stress, no drawdown. I can show you winning examples all day, but you need to prove it to yourself. You need to backtest. Imagine you drive to work every morning. You notice that at 8 a.m. route A is always jammed with traffic. After 4 days, you switch to route B. You optimize your route. That's what backtesting is. Go to TradingView, click replay at the top, go back 4 months, pick a random spot, play the candles forward, apply the strategy, identify trend, wait for fib, enter, manage trade, see if you would have made money. Do this 50, maybe 100 times. This builds your confidence, so when you trade with real money, you don't panic. Okay, the charts are beautiful, but how do we actually turn this analysis into cash in the bank? You need 3 tools. A broker, so the middleman basically. MetaTrader 4, the app to place the trades, and a position size calculator. Don't worry, I'm going to show you how to set up all 3 right now. First, the broker. This is simply the intermediary between you and the market. We don't have millions in the bank to call up Wall Street directly, so we use a broker to send out orders. The great thing is, you can start with as little as £50, and if you choose the right one, fees are super low. Which broker should you choose? So if you Google it, you'll find hundreds. In my private community, I share the specific broker I use, the one where I keep my own funds and which has the best trading conditions. If you want to know which one it is, check the link in the description. But regardless, here is how you choose a safe one. So check the spreads. The spread is the difference between the buy price and the sell price. It's how the brokers get paid. You want low spreads, but be careful. If a broker promises 0 spread, run away. Nothing is free in this world. They're likely hiding fees elsewhere or betting against you. Regulation. Look for brokers regulated by top tier authorities like the FCA in the UK or ASIC in Australia. Ensures they don't run off with your money. Next, the app, so MetaTrader 4, also known as MT4. You can download this on your iPhone, your Android or your PC. You've definitely seen screenshots of this blue and red interface before. It's the industry standard. But also know MT5 is the newer version. It's basically the same, just use whichever you prefer. I prefer using it on my phone as well. It gives me freedom. I can manage the trades from the gym, the pub, or while traveling. Once you download it, we aren't going to risk real money yet. We're going to open a demo account. So you click new account, open a demo account, search for your broker, or just use MetaQuote's demo. Enter your details, but important, don't set the deposit to 5 million. Set to something realistic like £3,000 so you get used to real numbers. And then the interface quotes, the list of assets, click the pencil icon to remove the ones you don't trade, like NZD, USD if you don't like it, and add the ones you do like. So for example, XAU USD, which is gold. The chart, show the price, but honestly, it's ugly. Keep doing your analysis on TradingView. Think of TradingView as the kitchen where you prep the meal, and MT4 is the waiter who just delivers the order. Trade, this is where you execute. To open a trade, tap the asset, so tap trade. Top line, market execution or instant execution. This means you buy or sell right now. There are other types like buy limit, waiting for a price to hit a lower level to buy. But for our strategy, we mostly use market execution. You'll see a box for stop loss and take profit. Never open a trade without filling in a stop loss. This is rule number 1. But wait, before you click buy, there is a number in the middle, the lot size. This determines how much money you're betting per pip. If you bet one lot, you might make £10 per pip, but you could also lose £100 in seconds. How do you know what number to put here? So we use a position size calculator, link in description, okay? Select Euro USD or whatever you're trading. Account currency, GBP or USD. Account size, e.g. 3,000. Risk ratio, this is key. Enter 1 or 2%, never more when you start. Stop loss, so in pips. Measure this on TradingView using the ruler tool. Let's say it's 25 pips. Click calculate. It tells you lot size, 0.24. This is the exact number you type into MT4. Now, if your trade hits your stop loss, you only lose exactly 1 or 2% of your account. It's precise, no gambling. The final piece of the puzzle, nobody tells you this, but psychology is 50% of your results. I blew my first account because I was emotional. I stared at the blue and red numbers. I felt guilty when I lost and I got greedy when I won. To succeed, you must detach yourself from the money. Think in R, so risk units. Don't say I lost £50, say I lost 1R. Don't say I won £100, say I made 2R. This turns trading into a points game, not a money game. I highly recommend reading Trading for a Living by Dr. Alexander Elder as well. It changed my whole career. It teaches you how to treat trading like a boring business, not a casino. If it's exciting, you're doing it wrong. Right, enough talk. Let's do this live. I'm looking at gold, so that's XAU USD. The analysis on this, we're in an uptrend. So price just pulled back into Fibonacci golden zone, 0.618. Confirmation, I see a rejection wick calculator. I've calculated my lot size for a 1% risk. I'm entering buy now on my phone. Stop loss is set below the zone. Take profit is set at the previous high. So 1 to 2 risk to reward. Okay, we're in profit instantly. Look at that reaction. The price is breaking the previous high. So I'm moving my stop loss to break even. Now I cannot lose. And boom, take profit hit. That's $1,200 profit, so approximately £950 in about 15 minutes of work. I didn't stress, I didn't guess, I just followed the rules. Here's another example on Bitcoin, okay? So entry at the OTE, price rallies, I closed manually for a $600 profit. Simple, repeatable. Now, how do you go further? A few years ago, I created a private community. We are now nearly 8,000 traders strong. Inside, I share my daily analysis, my market bias, and I even share my own personal trades in real time. Buying Bitcoin now, stop loss here, take profit here. I also provide over 20 advanced training modules that I will never put on YouTube. And the best part, you can get access for completely free. You don't need to pay me. You just need to sign up to a partner broker using my link. I get a small commission from them and you get full access to the group. It's a win-win. If you want me to mentor you every single day, answer your questions and see exactly what I'm trading every day, click the link in the description or the pinned comment. Send me a message on Telegram saying access and my team will sort you out. Look at these results from members just last week. Andy made £250, Patrick made £64, regular people making extra income daily.
Just want to say a few things to thanks Jay. Bit of background on myself as well. I've been following other people, their signals for a while. Got my confidence up, feeling good. Got a little bit greedy, a few wrong signals, lost everything. Felt like rubbish. Then came across Jay. Watched on sidelines for a while, watched his signals, watched his videos, thought, funded my account, got it from my Visa card, which you might think's a bit risky, but watching Jay, I thought, yeah, it's worth it. So I funded my account, 4.5k, a couple of months ago. Started following Jay's signals. Today, my account, 338,000. Thanks, Jay. All I've done is copied and pasted his signals, easy as. The guy is so easy to get on with, and you realise that he's not in it for his own financial gain from us. The thing that Jay gets is pleasure, knowing that he's helping us make money and get financial security. I'm at the point now where I don't work anymore. All I do is signals from Jay, because this lad is good. And all I say now is bring on silver, because I'm sure he's going to smash that too. And I'm sure he's going to do this as well. Get my account to 500,000 by April. And Jay's that good, I'm sure that's going to happen. All I can say, Jay, is you're a top man. Thanks very much.
Is Jay any good? There's plenty of people out there who are doing this and giving it on Facebook and YouTube. We make you thousands and thousands of pounds. So my experience, I've been with Jay now for just approximately 2 months. I had zero experience. And when I mean zero, I've never done it before in my life. Yes, you can see on Facebook, YouTube, all these people saying we can make you all this money. You've just got to do this and the other. But when you go and do your research on these people, some of them are quite cagey and they've got sort of bad reviews and all sorts of things going on. With Jay, he's very transparent. He will show you the wins and he will show you the loses. So you can't get easier and more transparent than that. So my model is little and often. I don't bet big at all because I'm still understanding how it works, what is a good stop loss, what is a take profit. So for me, this is my own experience. I do little and often.
I hope you got massive value from this masterclass. It was a pleasure to make it for you. Remember, manage your risks, control your emotions, and trust the process. Drop a like if you've learned something, subscribe for more, and I'll see you in the next one. Happy trading. This was Jay. Cheers.